Good evening, everyone. Welcome to tonight's special presentation. My name is Jerry D'Ambrosio, Senior Instructor with VectorVest. Although there is a direct correlation between a stock's price and its supply and demand, stock prices are strongly influenced by the emotions of traders. This observation was first made centuries ago by Japanese rice traders, and it still holds true today. Tonight I'm going to introduce 4 new candlestick reversal formations. Now when I say 4, I mean 2 bullish and 2 bearish. Each bullish candlestick pattern has its bearish sister pattern, so to speak. But before I do that, let me first review the candlesticks as they appear in VectorVest. Now here we have 2 green candles. If the candle is green, that means that the close of the day was higher than the previous day's close. If the candle is unfilled, it means the close of the day was higher than the open of the day. And when the candle is filled, it means the close of the day was lower than the open of the day. If the candle is red, that means that the close of the day was lower than the previous day's close. And if the candle is unfilled, the same rules apply here. The close of the day was higher than the open of the day. And if it's filled, it means the close of the day was lower than the open of the day. Now we've done some strategy of the week presentations recently on candlesticks, but I just wanted to review the way the candlesticks appear in the VectorVest program. Well, that brings us to our first formation, and it's called a bullish one white soldier. Now this is a 2 candlestick formation, and the formation is preceded by a downtrend. A bearish candle is observed on the first day. So remember, a bearish candle is a red filled candlestick. On the second day, a green unfilled candle is formed in which the open of the day is higher than the previous day's close, and the close is higher than the previous day's open. Let's see what this looks like on a chart. So here we have ENR. We can see that coming in, the stock is falling in a downtrend, hitting lower lows and lower highs. On the first day here, September 30th, a big red candle is observed, which just reinforces the bearishness. The second day here, the stock opens higher than the previous day's close. So at this point, the bears are panicking. The short sellers are starting to cover their positions. Now, the bears aren't willing to relinquish control just yet. You could see that they drive price a little bit lower during the day on October 1st. Doesn't get any lower, though, than the previous low back here on September 30th. The bulls come in, push the stock price higher, closing higher than the previous day's open. The downtrend is now damaged. As long as price continues to rise the next day, which gives us confirmation of that damaged trend, then a reversal is likely. Now, confirmation with this is when price goes higher than the close of day 2 here. So we could see that that happened the following day. Price opened lower but did close higher than the previous day's close, which gives us the confirmation. Here we're looking at MRTN. We can see coming in, the stock is clearly in a downtrend, hitting lower lows and lower highs. Here on March 10th, the big red candle is observed. The following day, the stock opens higher than the previous day's close. So the short sellers again are starting to get a little worried, cover their short positions. The bears do push prices lower throughout the day, but the bulls again come in strong and push prices higher, closing near the session highs here today, which is well above the open of the previous day. We wait for follow through the next day. We did get that in the form of a gap up even, so we had nice follow through, nice confirmation the next day, and we had some really nice opportunity here for some short-term gains. Here we have MSCI, same situation, stock is falling, hitting lower lows. We observe the bullish white soldier here on March 10th and March 11th. Big red candle here reinforces the bearish sentiment. Price of the stock opens the next day higher than the previous day's close, and the bears really can't push prices much lower than the open. You can see a very small tail here at the end of this candle. The bulls come in strong once again, push prices higher, and close much higher than the previous day's open. So you could see that reversal here with follow through. We get our confirmation, and we had a really nice opportunity here for some gains. MHK, same situation. Stock is extremely oversold. two really big red candles here observed at the end of September. Stock opens the next day on September 30th, much higher than the previous day's close and really at the session lows. So the open was just about at the low of the day, where the close was just about near the high of the day. So really strong bullish day here. Price of the stock closes higher than the previous day's open. We get followed through the next day, and you can see a clear change in sentiment at that point. The next pattern is called a bearish one black crow. This formation is preceded by an uptrend. A bullish candle is observed on the first day, so that's a green unfilled candle. On the second day, a red filled candle is formed in which the open of the day is lower than the previous day's close, and the close is lower than the previous day's open. So let's see what this looks like on a graph. Here we have ICLR. Stock is in an uptrend. We have 3 bullish candles in a row. Stock closes here on June 23rd, very near the session high. So these big green candles here reinforce the bullish sentiment. The next day, stock opens lower than the previous day's close and at the session high. So the bulls couldn't regroup after the open to push stock prices higher. The bears came in very strong, pushed prices lower throughout the day, closing lower than the open of the previous day. So we see now that the uptrend is damaged. We do get followed through the next day when the price of the stock goes lower than the previous day's close here. So once the stock opens lower on day 2, the bulls are getting a little nervous. This uptrend is losing steam, especially when they can't push prices any higher after the open. Here we have BRCD. Here's our one black crow candle formation here. Comes after an uptrend. We have a big green candle here closing right near the session high. The next day the stock opens lower. The bulls aren't ready to relinquish control just yet. They push prices much higher throughout the day, but lose steam throughout the day, closing lower than the previous day's open. So you have the formation right up here at the top with follow through the next day. And that was a really nice opportunity to take advantage of this stock to the downside, or at the very least, close the long position that you had open. Here's ICLR. There's our one black crow formation. It comes at the end of an uptrend. The uptrend seemed to be strengthening here towards the end as well. The next day, June 24th, the price of the stock opens lower than the previous day's close, closes much lower than the previous day's open. With follow through the next day, we can see that there was a clear change in sentiment right off of the top on June 23rd. Here we have CONE. Same situation here. Price of the stock rising in an extremely strong uptrend. Price closes on September 17th up at the top here, just off of the session high. Next day, the stock opens much lower than the close of the previous day and then closes near the session low, which is much lower than the previous day's open. We get some strong follow through in the coming days and a really nice opportunity here to play the stock to the downside or protect your profits right off of the top. The next pattern is called a bullish squeeze alert. I love this pattern. This pattern is a 3 candlestick formation, and it's a bullish reversal formation. The formation is preceded by a downtrend. A bearish candle is observed on the first day, and the second and third days each have lower highs and higher lows than the previous day. Let's see what that looks like. So on day 1 we have a big red candle here. So here we're just focusing on the highs and the lows of the day. So you see on September 29th the low is down here at the bottom of the wick. The high was up at the top here at the top of the wick. On day 2, the high of the day we can see is lower than the previous day's high, and the low is higher than the previous day's low. And on day 3, the high of the day is lower than the previous day's high, and the low of the day is higher than the previous day's low. So we can see this pattern forming, this wedge pattern where prices are getting squeezed tighter and tighter, and this just suggests possible stability in a downtrend. So here we have CLB. There's the bullish squeeze alert formation coming at the end of a downtrend. We have lower highs and higher lows, again suggesting stability and that the downtrend finally might be over. We do get followed through the next day with some really nice opportunity in the short term. CRR, there's the bullish squeeze alert pattern coming at the end of a downtrend. We get followed through the next day. Now this didn't quite take off as some of the other ones that we saw. It did take a little while for the change in sentiment to really play itself out. However, notice here on the 16th of December and the 15th, prices didn't get any lower than this recent swing low on December 8th. So even though it took a little while, it did finally start to move higher, and again we could see a change in sentiment, albeit for the short term. Here's another one, MINI. Clear downtrend here. We can see the formation occur right at the beginning of May. This one also took a little bit longer to develop, but these lows here, after the stock pulled back for a couple of days, these lows here were not any lower than the previous swing low. So we did get confirmation. It did take a little longer to develop, but you can see another nice reversal here. And the last formation we'll look at is called the bearish squeeze alert. This is just the opposite of the bullish alert. This is a 3-day bearish reversal formation. The formation is preceded by an uptrend. A bullish candle is observed on the first day, and the second and third days each have lower highs and higher lows than the previous day. And here's what that looks like. We observe a big green candle on the first day where the highs and the lows are at the end of the wicks. Day 2, the high is lower than the previous day's high and the low is higher than the previous day's low. So we have 2 inside days here in a row. You can see the squeeze of price on consecutive days. There's our bearish squeeze alert formation right at the top here. So we have a strong uptrend, seems to be getting even stronger right towards the end. We start to see some breakdown in that uptrend where we're seeing lower highs. We get followed through the next day, and that would have been a great opportunity to take profits and possibly play the stock to the downside. Here's DW. Nice strong uptrend here. Stock just hitting a new high. Prices are starting to get squeezed in tighter and tighter. Now we did have a few days here where the stock continued to fall, and the bulls came back strong and pushed the price of the stock higher. But notice where the price of the stock stopped rising. It stopped rising at the same level that it stopped last time. So you're looking at some pretty strong resistance here. And you also notice that we have 2 bearish formations. We have a bearish engulfing and a bearish harami forming right at resistance. So this is just another piece of evidence to help you make better trades, make better trading decisions. So if you are long the stock and you see this pattern occurring, once you see follow through, once you see price break through resistance, that's a great opportunity to exit, possibly play it to the downside, or just wait that downturn out until you see maybe another bullish formation occurring. The last thing I want to leave you with is in the Unisearch tool within the VectorVest 7 program. Now, no need to worry, you don't have to look at chart after chart and study graphs to identify these setups. What we've done is we've added those searches, those 4 candlestick searches into the searches candlesticks folder in the Unisearch tool. You see there's the bearish 1 black crow, the squeeze alert, the 1 white soldier, and the bullish squeeze alert as well. And all you need to do is click on it, go ahead and run the search. Once the search results are loaded, I'll go ahead and graph the stocks and just zoom in here on the more recent data so we can see over the last couple of days here that bullish 1 white soldier pattern is forming. And I'll just go through a few more stocks to drive it home. Well, this concludes tonight's special presentation. I hope you learned something new tonight. I want to thank everybody for joining us. Have a great weekend.